What's going on, guys? Hope you guys are doing well. I know it's been a little while since the last video, but my life's been pretty crazy. I finished an internship as well as a semester at school. I was taking 20 credits, so pretty heavy load. And then I started a new internship, which I'm doing now. So, been a pretty crazy time. I've also been looking for a new apartment. So, pretty busy, but we're here now. So, today, I don't have too many strict things that I wanted to look at. One for sure is something I read an article about the other day. I have no idea if this is going to be a trash idea or not. I guess I'll start off by saying I'm not a financial advisor. None of this is financial advice. Do your own research, etc., etc. Okay, so this stock that I read about the other day is called Magna International Incorporated. So, this is apparently an EV-related play, and EV, for those of you who are not Wall Street bettors, means electric vehicle. So, again, we're in my virtual machine with my my bypass for their paywalls, so you'll have to forgive the extra step. I am a human, okay? Let's go. Market actually hasn't been too bad. I have been keeping an eye on that. I am in a lot of VTI. I did buy a couple shares of Lemonade a couple weeks back. That's done pretty well. I'm not in anything else too crazy. Obviously, I have some of the stuff I've shown in my M1 portfolio before. Some semiconductor stuff, digital payment. And then I obviously have all my dividend and REIT stocks still. I've really been pumping those a lot lately. But we'll start reading this. So, Magna International and other integrated suppliers within the electric vehicle ecosystem provide a measured way to re-engage the rapidly growing segment. It cites their dividend growth, which they've grown for 11 consecutive years, rising 13% since 2010. I wonder if that's 13% annually or total. Founded in 1957, Magna is a seasoned supply chain partner to the auto industry. Is positioned to benefit from the electric evolution. It provides innovative solutions in the areas of electrification via their e-powertrain offerings, autonomy options, and new mobility. Not sure what that last one means. I'd be curious to know how much of their actual business is going to be, or is currently in, or will be shifted to electric vehicles. Because I feel like a lot of these legacy auto companies are pretty slow to transition. And just because they have the products doesn't mean they're actually contributing to the bottom line in any meaningful way. So that could just be a load of crap. It calls out some of their metrics right here. Revenue last year of $32.65 billion. And their market cap, I believe, is around $29 billion, which puts them at a price to sales of 0.89, which is rather low. I guess because it's such a low margin business. And they only made, doesn't even list their EPS, but their PE is 38.85 and their stock is 96.17. So it's probably, they got an EPS of a couple dollars. It's rather high beta, probably because it's in EV play, more volatile. through 2023. Looks like China is a decent part of their business. I believe them when they say it's the fastest growing EV market in the world. But I'm not a big fan of Chinese companies just because of the lack of regulation. And I don't really know, the culture or the markets or anything over there. I don't know squat. So I feel odd and out of place investing in areas like that. Well, so they're giving it an estimated EPS next year of $8.90, which would put them at like almost a 10 PE, forward PE, of course. That's kind of crazy. Here he compares it to the S&P. It's actually had pretty erratic returns. 50% in 2012, 64% in 2013, 32.5% in 2014, negative 63% in 2015, wow, 7% in 2016, and 30.6% in 2017, then back down to negative 20% in 2018, then back up 20.7% in 2019, 29.1% up in 2020, and then so far its 2021 year-to-date return is already 38%. That's kind of nuts. When it does well, it does really well, but when it sucks so bad. You can see here, this is just a crazy underperformance of the market. This is pretty bad here too, threefold. But then again, you have other areas where it's beating the S&P by a considerable margin. So, in the long run, probably a pretty solid play. If you owned it already, I don't know, going forward, obviously. Looks like, I don't see, this is what I don't understand. Does LG make vehicles somehow? How does that correlate to the auto industry, or do they also do manufacturing in other industries? That's kind of odd. Fisker, obviously we know, is an electric vehicle play. The comments are always funny. Let's take a look at some of these. Nothing too crazy, honestly. I don't know if it's a appealing enough story for me to buy in. I always I'll give things a chance. It's kind of like win me over, but I don't know. It's got to be like a big enough play in my eyes with conviction to make me pull out of like my current positions, which, to be honest, right now is a lot of total market funds. Here's a comparison comparing Magna to a shovel selling business in an EV gold rush. Again, the joint venture with LG Electronics. Not sure how that works. Potential Apple car deal. I wonder where they heard that rumor, because that sounds like something that Apple would never mention. They're comparing them to the TSMC of the EV industry. I do love TSM, as you guys know if you follow me a while. Okay, so it looks like their LG partnership is for OLED displays in automotive makes sense. As well as their batteries. Interesting. I didn't know LG was a big battery producer. Obviously, you know about their screens because I think they make most of the TV panels, even for these other companies. And then like phone screens and etc. But that's cool. That solved one of my questions from the last example, I guess, or from the last article. I kind of want to see this Apple Car possibility. Yeah, it sounds like it's just speculation. Apple doesn't like to make a lot of things in-house, so people are expecting that they'll outsource it to a veteran company, so to speak, which in this case could be Magna. But it sounds like that might be a little bit of a stretch. This seems a little excessive. A 10% Apple Car market share. Highly unlikely in my eyes, but well, at least in the short term. Significant growth. Yada yada yada. It does seem slightly overvalued. It's fair enough. I guess if it got low enough that then I might bite. It's got a decent backing, you know, it has real earnings, it's a solid company, it's been around a long time. I'd be a little interested to see more data around how much they're actually shifting their business model to electric. I'm not sure if that's something they can disclose in like an investor presentation or a quarterly release, but that'd be something to look into. Kinda neat. Let me know what you guys think down in the comments. I am going to get out of here. I hope you guys have a good night.